So this is going to be a crucial week in regards to Tesla, as we are going to be getting a fundamental update on the company that honestly has Wall Street on edge, as everyone's wondering how bad will the delivery numbers be. Now the reality is that Tesla has pretty much so far been adhering to this idea of this growth story where year over year deliveries are looking great. They're increasing at this rapid pace. However, a lot of individuals believe that this time may be the first time in a long time where things look completely different. And that's because we pretty much have gotten significant data over various data sources that are telling us that it's not looking good. In fact, independent auto industry researcher Troy Teslake recently tweeted stating that it's rare for Tesla to report fewer deliveries in a quarter compared to the same quarter of the previous year. It's happened only once in Tesla's history in Q2 2020 due to COVID shutdowns. He goes on to say that if deliveries this quarter are less than 422,875 in Q1 2023, it will represent a change in Tesla's year-over-year performance. He also goes on to say that in the last 3 years, Q1 was higher than the preceding Q4. For example, Q1 2023 was 4% higher than Q4 2022. Therefore, the normal trend would be for Q1 2024 to be higher than 484,507 deliveries in Q4 2023. However, unfortunately, that's not the case this time. But the reality is that it's not just him who believes that the delivery numbers are going to be significantly lower. It's actually the consensus on Wall Street. In fact, he also tweeted this chart right over here, highlighting pretty much the difference between his estimates being the blue line and analyst consensus on Wall Street being the red line. And regardless of which line you're looking at, you can see that there's this capitulation of the line going down lower. Now keep in mind, this hasn't been updated since March 10th, and actually the analyst consensus has even dropped even further to around 450,000. So that is honestly not good news.
This is bad.
But to make things worse, Wedbush security analyst Dan Ives, who's notoriously known as a super Tesla bull, cut his Tesla price target from 315 to 300 this recent Wednesday, stating that this is going to be a nightmare quarter for Tesla. Now, I do want to keep in mind that he's still bullish for Tesla in the long term. He just believes that right now it's going to be a challenging time, which is kind of in the same boat that I'm in, right? I'm still long-term bullish on Tesla. However, I've been saying for a while that this is going to be a challenging time. I've said it back in December 28th when Tesla pretty much hit its peak at price for a long time. And I said that I don't plan on buying Tesla just yet because I want to wait for the price to go down even further. And people were saying, no, you're crazy. However, here we are now with the price significantly lower, and we're also seeing pretty much analysts bring down their estimates. In fact, Wall Street's 2024 earning per share consensus estimates for Tesla have now come down nearly 25% since the end of 2023. And some analysts believe earnings could drop even further below potentially around 2021 earning per share numbers of $2.26. But for those who don't understand the significance of earnings per share, I want to show you this chart right over here where it pretty much shows you the S&P 500's change in forward 12-month earnings per share versus its change in price in the last 10 years. And you could see that pretty much the price action tends to follow the change in earnings per share. And so the idea is that the reason why analysts like to look at earnings per share is because it kind of gives you an idea of where the stock price is heading. And again, we've seen Tesla's earnings per share get adjusted much more lower, and many are fearing that it could even go even lower. But with that said, I want us to go ahead and hop into my laptop and take a look at Tesla stock from a technical perspective as well, as we habitually do on this channel. But before we do so, just a friendly reminder that if you have not done so already, consider tapping that subscribe button so that you don't miss out on any future upload. And with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla, and I just want to go ahead and highlight a couple of things that are pretty notable from a technical perspective. Again, if you guys are familiar with this channel, I often synthesize multiple different data points together to kind of form an idea of what's going on. So I take a look at the macroeconomics, monetary policy, fiscal policy, the fundamentals, and then tie it all in with the technicals, right? I'm not a big fan of the charts and the squiggly lines, but you add that in together with everything else and it helps you kind of have a better edge in the markets. And so there's a couple of things I want to go ahead and touch on in regards to Tesla. And I know that back when I first said, hey, look, Tesla's kind of overbought around here in December 28th, I was laughed at. Here we are today of, $175 and a few, and some change. And I still think that there is a bit more pain coming. And yes, it is scary depending on how you actually look at it, right? And I'm going to go ahead and touch on why it really depends, right? It's equivocal, I guess, in how you could go ahead and interpret it. But before we actually go ahead and dive into that, just a quick plug. If you're interested in joining the Push and Profit private group where every single day the markets are open, I share my overarching view on the broader markets as well as share some trade ideas. For example, some recent trade ideas. I highlighted NVIDIA as a breakout trade idea before it actually broke out back in December. And NVIDIA is up, I think, almost 80% for the year. At one point, it was up 90%. Another trade idea that we recently shared was gold. Gold is doing fairly strong. And then also XOP was another recent one that we got in just the other day. And so if you're interested in having those alerts for those trade ideas, as well as just kind of my view on the broader markets, again, first link in the description below. It's going to take you to the Push and Profit website. And it's $39.99 per month. You could cancel at any single time. But just wanted to quickly plug that in for those that are interested. But let's go ahead and kind of go back on tangent and look at Tesla, right? So one thing that I mentioned a couple of weeks ago was that Tesla was around this range over here where you see there's a lot of volume relative to price. And every single time any company is around this area where there's a lot of volume relative to price, that means that there's a lot of exchanging for that price between the buyers and the sellers, and that leads to consolidation, no major moves, right? Because of course you can't really break to the upside or break to the downside if you're in this range and people are buying and selling, right? It has to have that strong kind of buying pressure, selling pressure that leans in one direction. However, what's a bit concerning that I want to kind of address here is that we are currently at around $175, and we're only, if we go ahead and map it out to get out of this kind of range of high volume relative to price, we would only need about a 3% move down. Now we know Tesla is a high beta stock, and of course it could do that in a day very easily, right? If the S&P 500 index ETF SPY did 3% in a day, well, that's a crazy day. But Tesla, it's had days where it's done 10% even higher in a day. High beta stock, right? And so we're not too far off from falling below the shelf of a lot of volume relative to price. And if we fall below the shelf and there's continuous selling pressure, well, that's bad news for Tesla. And that's why I've been saying, look, if we're looking at it from a bearish perspective, I want to see Tesla fall down, and I would like to see what ends up happening around this range right over here, this gap around this like kind of 150 to 155 area. I want to see, do we hold up around here or do we break down below? I've been saying that for quite some time, and I'm still stuck on it. I mean, I've been saying that pretty much all the way from back in December 28th when I talked about this, and people were like, no, Justin, that's crazy. Well, here we are. We're very close to it. And so that's the view. If we do see some more selling pressure, we fall below this shelf over here, well, I want to look at what we do over here. Does it mean that I'm going to buy automatically? Again, it's still that confirmation of an uptrend. And when I say confirmation of an uptrend, I got a comment in a recent video saying, what the hell do you even mean? Like, you're just making things up. Well, confirmation of an uptrend is exactly what it means, right? It's just waiting for that confirmation that things are actually moving upwards. And that's why when Tesla hit $180 and everyone was saying that was the bottom, I said, I want to see it hit $204, close above $204 for that confirmation of an uptrend. I'm going to switch to a line chart real quick because it's a bit easier because it shows the closing prices. Tesla never closed above $204. You could see it closed at $203. And so I wasn't, pretty interested in buying Tesla. There was no confirmation of that uptrend, and in fact, it ended up falling down. Well, now at these areas, for me to go ahead and buy Tesla to the upside, I went ahead and I adjusted it where now the confirmation for an uptrend for me is around above 200. And you'll notice that the reason is because we see that that was a, you see that's a resistance in the past, but also coincides with this area where there's a lot of volume relative to price. If we break out of that, well, guess what? Now we have this volume pocket where we could see Tesla run up again. And so that's when I'll be more optimistic to add more shares into the upside for my long-term portfolio. But by the way, I also want to keep in mind that you guys don't have to follow whatever I do, right? You guys should only do whatever you see value in. If you're trading, if you're investing, again, don't copy anyone else. I don't care if it's a fund manager like Kathy Wood. I mean, I've talked about how she hasn't been the greatest. Let's go ahead and talk about that, right? We're looking at ARK, but if we take a look at a weekly view, I mean, she got decimated in 2021 and 2022. And now she's having a few trades that are doing pretty well. But honestly, if we go to a longer view, really hasn't done much in comparison to simply the broader index. In fact, if we look at 2014 to now, yeah, it looks great, but there's so many other companies or just broader indexes that have done much more better, or sorry, let me correct myself, much better than ARK. Of course, yeah, Kathy Wood looked like a king back in the pandemic times, right? But she quickly, just lost gravity there and pretty much started falling. But anyways, I don't want to go too far off tangent. Going back on Tesla, don't copy me. Don't do whatever I'm doing unless you see value, right? And so from a, again, bearish perspective, I'm looking to see if we fall down, what happens over here. Do we get that bounce, confirmation of an uptrend, or do we close above 200? Very simple. Haven't been trading Tesla because there's so many other names that I've been trading that have been doing far much better. But that's pretty much the outlook. Now, when do we get these delivery numbers? Now, it's not for sure what date exactly as of the time of the recording for this video, but it looks like it's most likely going to be the beginning of next week. Now, one thing I want to remind everyone is that, okay, next week, what happens Monday? Well, it's April 1st, April Fool's Day, and we don't have that much economic data taking place, so it could possibly happen on April 1st, but I think it's much more likely that we get the numbers on April 2nd, on Tuesday, as we also have the job openings, and so we have more economic data, and that's going to provide more kind of noise for the markets, right? There's more data that the markets are going to be following, and I think Tesla, if they're going to be strategic, they're most likely going to want to kind of drop those numbers kind of when they're not the primary focus, like if it was on Monday. And so that's just my guesstimate. Again, it could come out Monday, but we'll definitely be mindful of when it comes out and kind of see what exactly is going on. Tesla, year over year for the last, I guess decade or so, right? Decade, 2014, has been delivering more vehicles. However, now we're seeing a shift, and it's looking a bit scary, but the reason I say it's equivocal is because it's really dependent on how you view it, right? If you see Tesla falling down and you believe this is just something in the short term, which I believe is just something in the short term is scary, then that's actually a great opportunity to scoop up more shares because, again, we know that there's government intervention to go ahead and make sure that EV cars become the standard within the next 5 years. Who's primed to go ahead and reap all the benefits for that? Still, it's Tesla, right? Until that changes, then I'll change my mind. But at the moment, it's still Tesla. And so, yeah, things are not looking good. Yeah, things are looking scary. But it's honestly for the short term, still with the idea that things are looking great for Tesla in the long term, especially in the robotics space. I mean, they're in the lead. Yeah, there's several other companies making robots, but none of them are even comparable to the features that Tesla has with their Optimus. And I guess I forget the name of the new version of it, but is it Bumblebee or is it V2? I honestly don't even remember, but definitely we're seeing significant improvement there. And so I'm still optimistic in the long term. That's just my view. But you guys let me know in the comment section below, what are your thoughts on Tesla with its delivery numbers going into this week? You guys could comment that in the comment section down below. But before you guys go, also make sure to check out this video right over here. Or if you've seen it, check out this one here. And I'll see you guys on those next videos. Take care, guys.